Hey, what's up everybody? Happy Friday. I am re-recording this video. I just recorded like a 20-minute video and I kind of just started rambling on. It did make a lot of sense. I just decided to bag that. I was going to show you a little hack I found on the animal farm. I'll show you that later. I don't know why it took a turn for the worse, but it did. So anyway, good Friday so far. I just got out of a bunch of meetings. Some of them were for my in real life business. So those were good. Things are kind of getting set up. I'm trying to get everything set up for the remainder of Q4. A lot of what I do, as you guys know, is marketing, and Q4 is the biggest quarter. So a lot of pieces I need to put in play there to have everything running smoothly. As you guys know, also, I do a lot of commercial real estate, and we're trying to close out some of these leases and deals before the end of the year so we can get everything prepped for next year. So it gets tricky during these times, especially in the commercial real estate world, because as holidays come up, it's more difficult to get stuff done. So your inspectors are out, your cities don't care about what you have to say in general, but certainly not on the holidays. There's a lot of people that seem to take late November all the way through January 5th off, and they're just like won't answer emails in between that time. So it gets pretty challenging. The other meeting I had was in regard to the decentralized finance space and some stuff that might end up aiding the platforms we know and love so much, like the animal farm. So really positive stuff. I think it's looking really good moving forward. I think we're going to see some changes get implemented that you will all like. I'll share more when I can, but just know there is stuff going on behind the scenes that hopefully will help and drip in the animal farm, because right now the world of crypto is in an absolute mess. So like I said, I'm just doing this video off the cuff, but I was researching, as you guys know, the FTX collapse. In addition to FTX collapsing, other exchanges are starting to go under. There's certain stable coins that are actually losing their peg. So we are in the Wild West right now, and we're in the bottom of the crypto bear market. If you guys haven't seen this collapse, if you haven't seen the price in Bitcoin drop down to about 15,000, if you haven't seen any of the other exchanges, I'll just explain it to you. In a nutshell, a major exchange like FTX in this case was over leveraged. When you're in a bear market and you're over leveraged, as prices start to move down, you put yourself in a really vulnerable position. That's what happened here, and FTX collapsed. Binance came out and said, hey, we're going to acquire you, but they had a letter of intent or a letter of agreement that was non-binding put out. LOIs and LOAs, just so you guys know, are generally non-binding. They're not legally binding. All it is a loose proposal, a loose agreement that you're going to take over something with certain metrics. It's generally the document that you put forward in good faith to kind of bring the two parties together. Once you've agreed on that, then you go to like all the legal work that actually breaks everything down in detail. So until that legal paperwork is actually signed, there's no real deal set in stone. You're not liable legally to carry out that deal. It's non-binding. So anyway, Binance came in, said, hey, we're going to do it. During their due diligence, they must have realized that it wasn't a very good deal. And so this guy's wealth collapsed. Most of these people lose their money. So I thought this article was interesting. It's basically like, hey, what happens when your crypto exchange collapses? And it's interesting to me, but a lot of people really don't know this. So if you bank at a bank, and if you've got a bunch of money in your account and the bank goes under, the federal government, the FDIC, will come in and actually insure your account up to $250,000. So that's just something they set up to make sure that people felt like banks were backed by a larger entity, and if they were making faulty loans and went under, that they'd be able to recuperate their money. And during the 2008 financial crisis, I want to say, don't quote me on this, but I think 150-ish banks went through a scenario where they basically collapsed, and the FDIC had to step in and actually give those bank deposits back up to $250,000 for each person. So it does happen, and the FDIC does come in. Now, one thing that's important to remember is it's only up to $250,000. So if you have $1 million in your savings account at that bank's out there making poor business choices with your money, using your money as leverage to back loans or whatever. If it's risky, which oftentimes it is, and they end up going under, you've got $1 million in there. The FDIC is only going to give you the $250,000 that they actually owe you. So you're going to be out $750,000. So for most people, that doesn't matter because most people don't have that much money in the bank. But if you did, you would end up really being screwed there, right? So in the crypto market and for crypto exchanges, there is no FDIC, there's no regulation around that. So it's really just a business. And what you're doing is you're giving that business a custody of your tokens. So you buy a bunch of Bitcoin, you throw it on an FTX, you throw it on Coinbase, you throw it on crypto.com. Those guys now maintain custody of your assets. You just said, here, why don't you hold on to this for me? And in some cases, they're staking protocols and you're saying, hold on to this for me with a promise of greater interest. Sometimes you're just handing it over to them for safekeeping and you're utilizing that to buy and sell tokens. You're using that exchange to buy and sell tokens, is what I'm trying to say. The issue here is that those are centralized exchanges, so someone else has control over them. And the way people manage your money through those is custodial, meaning they actually have custody or control over your tokens. So what happens when an exchange like that goes under? Well, you lose everything. They basically decide, hey, we're liquid, we've got to go under, we're going to file bankruptcy or whatever. And the investors are basically out all their money. Now, the big boy investors, they may get back some money. They have priority over everyone else. So they may get back, a little piece of the investment that you had in there. But all the little guys, you're screwed. If you had $10,000 in Bitcoin, it's gone. So that is the issue with centralized exchanges, and a real major issue with centralized finance. People are trusting these financial institutions with their money. But the problem is not every financial institution is trustworthy, even though they're an established name and they've done great things for a long time. Even look at Wells Fargo, Bank of America, all the big banks that were in a bad position when the 2008 financial collapse took place. Those banks were making really risky loans, risky decisions with your money that you had deposited. They were making those risky decisions because the more risk, the more reward. So they made a bunch of risky investments, and as you know, everything collapsed. And then what happened? Generally speaking, those businesses would go under. They took your hard-earned money. They promised to pay you pretty much no interest. They invested it into really risky vehicles. Those vehicles went under. That would, in normal terms, take down that business. The bank would go under. But what happened instead? Instead, the government decided to come in and bail these guys out, meaning they made the taxpayers, you who actually had your money in the bank, pay taxes to bail these guys out. So again, these guys took your money. They promised to pay you pretty much no interest. They invested it in really risky things. Those really risky things went bad. And instead of them paying the penalty for it, they put that penalty on the taxpayers. Welcome to the financial system as we know it. We bail out the elites and we let the little guys die. So as you can see, there are some major issues in the centralized finance world, and they need to be corrected. They need to be fixed, but nobody wants to fix them because the people in power want the ability to control the system. They want everything to be centralized. They want to be able to control the money flow. They want to be able to control where you spend your money. They want to be able to control all the assets that you have. That is ultimately what governments do. So how do we solve that problem? Well, we solve it with smart contracts. We solve it with decentralized finance. The best part about decentralized finance and the worst part about decentralized finance is there's no regulation. So as you guys know, we're in the wild, wild west. Anything goes here, things go under, things are absolutely nuts. And that's why a lot of people turn away from decentralized finance. They're like, it's too risky, it's too crazy. And in a lot of cases, they're completely right. But look at centralized finance. Look at the crypto exchanges that are failing. There's certainly a lot of risk over in the centralized finance world. So you've got the centralized finance that has risk. Decentralized finance is much higher, but what's the reward between the two? Centralized finance in the general investment category, the reward is way down here, right? Risk is here, reward is way down here. In decentralized finance, risk is here, reward's way up here. So at least you have the opportunity to get rich if you pick the right projects. And here we are with the animal farm. The crypto markets are getting brutalized. Bitcoin to 15,000. I mean, if you look at the charts, if you looked at a heat map of the crypto markets 2-3 days ago, it was all blood red. I mean, a lot of cryptocurrencies were down 20%, which is just a major drop in one day. But what happened to the animal farm? Well, we still have just about 130 million in TVL. Nothing's really changed there. Pigs are trading for about $115. Nothing's really changed there. Dogs at 53, about the same. So that should make you feel comfortable that the animal farm, being as decentralized as it is insulated a little bit from what's going on in the general market. So that certainly helps. So it's decentralized, but on top of that, it's non-custodial. So if I had FTX, that was my favorite platform, I bought a bunch of Bitcoin on there and I was just letting it sit, that Bitcoin is likely now gone. I have no money. If I buy a bunch of Bitcoin and I move it over to the animal farm and I stake it on the animal farm, A, I'm earning a yield. So I'm actually earning money for it to sit there. B, if the animal farm goes down, I still have control and custody of those tokens. So my Bitcoin doesn't go anywhere, it just stays with me. So the moral of this story is centralized finance is slowly dying out. I think people are seeing a lot of the underlying systemic problems with centralized finance. And I think that over time, the cream is going to rise to the top and people are going to realize decentralized finance may be the way to go. Humans have flaws, and if humans are running the company, then the company's going to be flawed. Smart contracts, if built right, the system does all the work. There's no guesswork, there's no emotion, it's all in the code. So centralized finance is dying. And Forex said it best. Let me show you this real quick. All right, here it is. And this is in regard to this tweet here. So breaking crypto platform BlockFi to halt withdrawals. Basically, if you've got money in BlockFi and you want to take it out, you can't do it. So they've locked it up. So I think people were talking about that, and look at Forex's message. Absolutely savage. Animal Farm cannot pause withdrawals, right? It's an immutable contract. CeFi is dead, and we will use their bodies as fertilizer. Absolutely savage. But he's right. This is a Wild West cutthroat world. CeFi is showing that it's got a lot of problems, right? Centralized finance, too much control, too much power, too much leverage, too many emotions. Decentralized finance, I think, is the future. What do you guys think? Let me know down in the comments. Don't forget to like and subscribe. Happy investing.